Good morning. It's August 26, 2013, a Monday, starting the last week of August. We're going to be into September. Everybody's going to be back to work soon. We can get rid of these doldrums we had. The S&P 500 was up modestly last week on a late week rise. Let's look at it, the S&P 500 ETF just from a 5-day perspective. You can see what I was talking about. This was the Federal Reserve minutes, and then we had the trading halt in here for most of the NASDAQ. Stocks did not trade for 3 hours. Pretty crazy, right? Just imagine going to a pawn shop or whatever and trying to sell something, and the pawn owner says, I can't buy that. Same thing happened. Anyone trying to sell Apple stock, for instance, it couldn't be sold. What is the value of something that can't be sold? Zero, right? Or it's priceless, I guess. I mean, someone might hold on to it, say, oh, this share certificate of Apple that I can't sell is really worth a lot of money if the market ever opens for trade again. You would think that would be bearish for stocks, right? People would be like, oh my goodness, I couldn't sell for 3 hours. Nope. It was the exact opposite. Stocks rallied, closed the week just off their highs. And I think we're going to see continuation of that heading into this week, even with the awful data that came out this morning. We have, since November 2012, we have the Abenomics low and continue every pushback has seen a nice V bottom. So right now we have kind of a U bottom. What do you think is going to happen? I think we're going to curl up, and I think we're going to at least come up to this trend line, either put in a double top or break through for new all-time highs this year. Pretty crazy. A lot of bears out there now sniffing around. I see a lot of bearish sentiment, mostly from the taper talk, the uncertainty going forward. What's the Federal Reserve going to do? Bottom line is Federal Reserve is only tapering its asset purchases, possibly. They might not even do that. And to me, that's a continuation for stocks. There's no place to be in this centrally planned marketplace other than stocks. So that's S&P 500 ETF. I think we're heading higher. Get up to about 170 again, and then we're going to look to test this former support line from November. It's going to be resistance. We break through that. We have Tiffany reporting earnings tomorrow before the bell. I think it's setting up for a beautiful decline. However, there was large option activity, unusual option activity on Friday at the 87.50 strike. So it's going to be interesting to see if the stock can get up there. We'll know why, because somebody knew something that none of us were privy to. Ever hear of that before? How about that Leap Wireless trade about 3 months ago? Somebody made millions and millions of dollars on just a couple $1,000s. We haven't heard anyone getting in trouble for that, right? So I guess people figure they can get away with these trades. They're going to do it. The good part for us is if we can spot these trades when they happen and utilize them to our advantage. We're not trading on inside information. We're trading on general market statistics. And to me, just judging from the chart here, looks like we're at a multi-year top, okay? Almost a triple top, you could say, and we're going to pull back down, and this is a long-term channel if you bring a trend line across here. So we're going to head down to about 60 and then ultimately $50 for Tiffany. That's what it looks like for me. Tiffany and Company heading lower post earnings. That's before the bell. Tomorrow, that's what's setting up so far. Early this week, we have some of the retailers reporting earnings. Express Stores, which is breaking down, but we have some positive analyst remarks this morning, which might see the stock bounce, give an opportunity to buy puts on the cheap. Thank you very much, analyst. You're the best. And we have Guess. Guess is going to be the biggest retailer reporting this week. Again, breaking down. Of course, we had A&F and Aero. I called both of those last Sunday night. 4 days later, they're both down almost 20%. It was a great call. I'm not sure we're going to see the same kind of decline with Guess. I would look for support here at the $26 level. But Guess and Express, the analysts loved those stocks. They love them. I'm in love with you, they say. And then we have Campbell's Soup, which I think is possibly put in a double top. It's going to pull back here. The best part about Campbell's Soup is, besides the cream of mushroom and the cream of celery, is that the options are cheap, which means you can trade this for downside and not put a lot of capital at risk. And that way you have a little extra money to buy some Campbell's pork and beans. All right, UPB here from OptionMillionaires.com. Let me just close out with TLT. Yeah, you know me. TLT is looking like it's going to come back up to this former support line, now acting as resistance. I don't see it going any further than that. 106, we're probably, 104.70 or something like that before the bell here on that awful economic data as people are putting their money into bonds but I think you can look. The writing is on the chart. No, it's not on the wall. The writing is on the chart. This chart is very bearish. We're going to head back into this channel, which we've already started to do, and we're going to duplicate this up move to the downside. We're going to head down here to about 80 bucks. And everyone's going to be like, oh my goodness, I wish I would have seen that before it happened. Well, I've been talking about this trade for about a month and a half, 2 months now, and it's coming to fruition, whether you want to believe it or not. And finally, let's just go to Tesla, because I think it's interesting. You see it, if you go to Seeking Alpha and some of the people who have investment sites talking about how they continually are shorting the stock. I'm shorting Tesla. Ooh, shorting Tesla here. Shorting it. And then when they short it 6 times and they're wrong, all 6 times they come out and they write something on their website. Oh my goodness. Tesla is the next. It's not GM, is it? It's the next bubble that's going to burst. Why not just play the trend? I don't know. Everyone's fascination with trying to call a top or a bottom. Just stay with the trend. I'll tell you what. The trend is your friend. The trend is your friend. And I think Tesla, considering its short percentage and the fact that the bear is continually trying to short the stock and say how overvalued it is, it's going to keep going. Just like Priceline and Netflix when it was at 50 bucks. And Amazon, which everyone thinks, I mean, look at the shorts on Amazon. Everyone thought Amazon was just garbage at 150 and then 200 and 250 and then almost 300. What, it hit 310 just a little while ago. I mean, the shorts in this marketplace are wrong. It doesn't matter what the stock is. Thank you, Ben Bernanke and the Federal Reserve and all the central banks out there for making the shorts look like morons. All right. Obviously, Tesla Motors will come back to earth at some point. I wrote about this weekend. Back to earth for Tesla Motors might be $250 a share after it hits $600. Would you want to be short from here all the way up to $600 or $500 or what? Even another 100%, which would be $300. That's the short. I don't understand what the fascination is with wanting to stand in front of a 100-ton locomotive. Oh my goodness, this train is coming at me at a rapid rate of speed. Let me stand in front of it and see if I can repel its momentum. Yeah, I don't think so. All right, UPB here from OptionMillionaires.com. Hope everyone has a great start to the week. I think in spite of all the negative sentiment, stocks are just going to melt higher this week, hopefully in a more rapid fashion than last week when they pretty much just eroded everybody's S&P 500 ETF Spider option premium. All right, UPB. Everyone, goodbye.